the charts with Chris Verone, Strategas partner and chief market strategist. Chris, what do you see in the charts that keeps you so bullish?
Well, one of our big calls this year has been this idea that cyclicality was not being extinguished globally, but simply it was moving east. And we just talked about China, but now we see it here in Europe as well. These European industrials in particular are making new relative highs here. The European banks, as we know, have been part of the story, not just for a couple months, but frankly for 18 months. Yep. And when you look at the fund flows, what I think is particularly notable is no one's there yet. And, one thing that we've always said in our work, and we steal this from the great Marty Zweig, he used to always talk about how you can be philosophically bullish or actually bullish with real dollars. I think people are philosophically open to the idea of being long in Europe, but they're not there with real money. And when you go chart by chart by chart, EWG, the German ETF, finally, after 20 years, making a new high this week. These were long periods of just secular stagnation where you've now seen these markets break out. In particular, the industrials, the banks are really strong. On the other side, what you don't see is energy working. You don't see basic resources in the fold here. So to say that what's happening around the world is particularly inflationary, you're not getting it from the messaging of the leadership. Energy doesn't work. Materials doesn't work. This is about industrials. This is about banks. This is about financials broadly.
When you say investors are just not there yet and they're underweight relative to other areas, where are they maybe this is too abstract of a question, but where are they relatively overweight compared to Europe? And because where does that money come from?
Yeah, I think that money has to come from where it's gone for the last 12 or 13 years, which is Max 7 in
so that's what I want to get at, yeah.
One of the things, just kind of putting this into the macro discussion, one of the things that we find really notable is U.S. large cap tech peaked relative to the S&P July 10th. What else happened July 10th? Dollar yen peaked. Exact same day. Yen has driven, this yen carry for 13 years, Guy, has driven this entire thing. I mean, all these yen pairs are back on the August low. Really, really important shift there.
We talked about that. There was a Thursday, a CPI day. And by the way, I think, Tim, one of these days, Siemens was his final
That's
pick.
2 nights ago, Guy.
Why are you yelling at me? Why are you yelling at me?
You seem to need some
I knew it was this week. I apologize. Today's Wednesday.
It was
a little
aggressive.
And anyway, that's one of the bigger components of the EWG. So I'm with. And if you look, to your point, we just broke through a huge double top, and it looks like it's off to the races now.
And what's so striking about all this is when you look at the move we've seen in Euro USD, right? Euro's gone from 105 to 108 here pretty quickly. Look at the sentiment data on Euro. There is no length from the longs. If you look at the surveys, people are still very, very bearish Euro. I think there's a big opportunity here, not just to be long European equities, or certainly buy any pullbacks. I recognize they've moved a lot the last several days. But the currency here is really, really powerful.
Yeah, and you've been seeing this in your meetings.
Yeah, and look, I think we really observed peak bearishness. I was in Europe in December, and I didn't have a single person an entire week who was making the case for Europe over the U.S., and usually I get a few people who want to beat me up on that. Yeah. I'd be curious, though, Chris, did you notice, do you have any thoughts on sort of countries like Germany versus France, UK? Because I've noticed the German flows are improving and Western European equity flows are improving, but you're not really seeing the same kind of follow through with France or the UK.
Well, what's funny is the peripheral has been the leader here the whole time, right? It's been Germany that's been the laggard. The Italian market, the Spain market have been absolutely on fire. I think the point you make on sentiment really resonates with me. It was maybe the first or second week of January. I was listening to Christine Lagarde speak at Davos, and she described herself as peak pessimistic on Europe. This is the European central banker describing herself as pessimistic. I want to be long all the stocks when the central banker is bearish, because it tells you have a very accommodative central bank there, and that was against the backdrop of kind of all the data starting to improve. If you look at the economic surprise index in Europe, it looks very different than ours here. So I don't think cyclicality is extinguished globally. It moved from here and it moved east. We see it in China. We see it in Europe as well.